All right, Steve here. Today we're going to dive into some of the heavy machinery of the options world. I'm talking about four-leg spreads. So if you've got the hang of single options and verticals, this is your next logical step. This is how you start building professional-grade strategies for consistent income.
Look, the whole point of these strategies is to build a fortress around your capital. You use them to profit from the market just sitting still, from time just ticking away, especially when everyone else is betting on some huge move. Yeah, they can look complicated, but as we're about to see, the platforms we have today make putting them on just a few simple clicks.
Okay, let's get right into it. The four-leg fortress. Let's do a quick overview. When you click that four-leg option on your trade ticket, you're not just picking one strategy. You got to understand you're opening a gateway, a portal to a whole world of sophisticated, risk-defined structures that you can design to do exactly what you want them to do. So what's in this toolbox? Well, you've got your iron condors, and that's going to be our main focus today, because they're ideal when volatility is high. You've got your standard condors, both calls and puts, and then you can get into some more exotic stuff, things like box spreads, double diagonals for longer-term plays, or, and this is where the real power is, you can just build your own custom strategy from the ground up.
All right, let's get to the main event, trading the goalposts, which is what I call the iron condor. Now, I want you to forget the fancy name for a second. Seriously, just picture this. You are trading the goalposts on a football field, and your only job is to keep the ball between them.
So what is this thing, really? It's simpler than it sounds. You're basically selling two different credit spreads at the exact same time. You sell a put spread way down below where the market is today, and you sell a call spread way up above it. Your goal is dead simple. You want the index to just expire harmlessly somewhere in the middle.
Okay, let's put some real numbers on this to make it tangible. As I'm talking right now, the S&P 500 index, the SPX, is trading at 67.40. That number? That's the 50-yard line of our football field. It's where the game is being played right this second.
Now here's our game clock. It's March 8th, 2026. With the SPX sitting right there, putting on an iron condor is essentially a bet. You're betting that the market's going to stay relatively calm, that it's not going to make any wild swings between now and expiration. You're positioning yourself to profit from stability. And the best part? You get paid right up front to do it.
So how do you build this on the platform? It's a simple four-step play. First, you plant your downside goalpost. That's your out-of-the-money put spread. Second, you plant your upside goalpost. That's the call spread. Together, those two define your profit range, your field of play. And for taking on this defined risk, the market pays you. You collect your net credit right away. And this right here, this is a huge mental shift you have to make. When you sell an iron condor, you're not the one betting on direction anymore. No way. You become the casino. You are the house. You're collecting premiums from all the gamblers out there, betting on a massive breakout to the upside or a crash to the downside. As long as they're wrong, you keep the money. All right, now that you get the iron condor, let's talk about a close relative, the standard condor. If you're familiar with a butterfly spread, I want you to just think of a condor as a stretched out version of that. It's built a little differently, using either all calls or all puts. And here's the key difference. A butterfly, man, that's like trying to land a fighter jet on a dime. It needs the stock to land on a very specific price for you to get that max profit. It's a tiny target. A condor, on the other hand, stretches that target out. It creates a big, wide landing strip for your profit. Now, the trade-off, yeah, is a slightly lower maximum payout, but your probability of success goes way, way up because the trade is just so much more forgiving.
And finally, let's talk about the most advanced tool in the shed. What if the standard templates, the iron condor or the condor, don't perfectly match up with your view of the market? Well, that's when you become the architect. That's when you use the custom four-leg tool.
This tool gives you complete and total control. You can manually assign 4 different strikes. You can even assign 4 different expiration dates if you wanted to create something totally unique like a double diagonal. You build your own proprietary risk profile that fits your exact market thesis. The platform does all the heavy lifting, all the complex calculations, and just gives you a single net debit or credit. You're not managing 4 separate trades anymore. You're managing one powerful, customized machine.
So let's tie all this together and talk about mastering your income. Look, these four-leg spreads, they might seem a little intimidating at first glance, but believe me, understanding how to build them is the absolute key to unlocking consistent, professional-grade income from the markets. It's all about shifting your mindset, from guessing direction to strategically defining your risk.
So, the crucial points to take away from this are simple. 1. Four-leg spreads are your toolkit for high-probability income. 2. The iron condor profits from the market staying right between your goalposts. 3.
A condor is just a stretched out butterfly, which gives you a wider, more forgiving profit zone. And 4, the custom tools, they let you become the architect of your own strategy.
Look, master the goalposts and you will master your income. It's as simple as that. So I'll leave you with this question. Are you going to use these tools to build a fortress for your capital, or are you just going to keep placing bets? This is Steve. Build your fortress, and I'll see you at the open.